The next speaker is one of the most sought-after thought leaders from the UK market. He's from Fidelity. I don't know how much you know about Fidelity, but think $2 billion US close to under management, and he's also an Oxford contributor. And you see him in all kinds of interesting environments where property technology meets the real estate industry. So please give it up for Matthew Richards.
Sorry, that's the fun bit over. I'm the guy in the suit with the money. I was told by Magnus I had to wear a pink shirt to fulfill everyone's stereotype of the British financier. I'll assure you I don't live under a volcano and I'm not trying to dominate the world or anything. What we're going to do today is just take you through some of the things. As I said, Fidelity is a fund management house. Globally, we manage about $3.5 trillion across different asset classes, and real estate is a very big area for us. We've got a lot to get through. We've got 20 minutes, haven't we? Just by way of background, before I was involved in this, back in 1994, I set up a small company in Hong Kong called PMI, and I went to the Hong Kong government and said, you should get interested in something called the internet. And we were the first ever .com in Hong Kong, which we sold in 1999 to the Chinese government. So I retain a very keen interest in technology and property. But what I'm going to talk about, we've been talking about physical property and infrastructure. I'm going to talk about the financing of it and give you some ideas about some of the challenges and opportunities for you guys of how you can help us in the financing of property and the money, because allocation of money requires a lot of information, a lot of processing, and a lot of data. Okay, so what we're going to cover very briefly in this session is we're going to look at the context, the size of the market, just to bend your mind a bit. Then I'm going to give you a kind of case study of what it is we're actually doing, and I'll give you a case study of the sort of work we do, and hopefully you can immediately have some light bulb moments and think, I could help with that, because we're not unique, everyone else is doing this stuff. And then I'm going to just wrap up in the last few minutes with some of the key changes. Some of these are legislation and boring old politics stuff, but have a guess what? That impacts money, and that impacts how we all, invest and build and the built environment. And maybe some of the things for you to think about and opportunities for you to take away, and how you could solve some of these problems using technology. So it's very investment focused, okay? This is not about, hey, what's happening to my house? Because whenever I go for dinner, I never tell anyone what I do for a living. I say I'm a farmer or something, because they always say to me in the UK, what's going to happen to my house price? And I have no idea. So very quickly, context. The global real estate market value of the investment market, $7.2 trillion. Okay? Last year, the investment turnover in global real estate investment markets was $825 billion. So just working on a basic 1% fee, we're talking about $8.5 billion in broker fees alone. This doesn't allow for all the stuff you've got to put in buildings, people being there and everything else. This is a big market. Okay, and as we saw with Spotify and everything else, big successes in technology have global applications. So context, this is a very, very big market, and the European real estate market alone is worth about $2.3 trillion US. So what business are we actually in? Everyone says, oh, you're in the real estate investment business. Am I? Well, what do we do? What's the nature of our business? Well, we sell investment skills, we identify opportunities, we mitigate risk, we buy things, we advise people on tax and legal, we manage investments for them. Everyone here has investments of some sort, whether you've got a pension or anything else. The issue is our primary asset and our market advantage is knowledge. We're not in the real estate business. We're in the business of taking money and turning it into more money for people. And that means we're in the information business. All investment markets are information. They are the purest form of information markets that exist. And what are we trying to achieve for clients? Well, we're trying to make things grow in value for them. We're trying to generate rental value off properties. We're working with tenants, etc. And we're generating a steady income return to pay all those pension pots that are going to blow a hole in all our government budgets in about 30 years' time. So we're quantifying lots of data. We're looking at tons and tons of things. We're trying to look at risk and return expectations. We're trying to understand the nature of our investments and where are the primary risks to how you lose money when investing in real estate. So actually, we're going to need a lot of data, a lot of processing, an awful lot of systems, all the way from the ground up as to what's happening in our buildings all the way through to what's happening in financial markets this morning, better call the tech guy. So let's have a quick think about what we do, and I'll try and give you an insight in a few minutes into what we do as a fund manager and see if you can spot the opportunities, okay? Basically, our business revolves around market research. We need to look down into markets. So if we were looking at an investment, our sister company Pembroke very recently did a very big deal here in Stockholm and the Nordea office. That was a development we did. We started by looking at right down that whole area, looking at the building itself, getting data on all kinds of aspects of the Swedish market, understanding what the client wanted, understanding right down to all the tenants, the local businesses, and the structure of the market. We have to know that, and we have to monitor it through the life cycle of an investment. We do asset underwriting. What does that mean? That means we have to figure out what it is we're buying, and are we going to make any money on it, okay? And we have to put an awful lot of information in front of our investors to say, should we do this or not? Once we've bought it, we don't just chuck it in the boot of the car and drive off. We have to manage it. Might be own it for 15, 20 years. When I very first started on my first job in 1988, I was sent to a company in London, which no longer exists, called Sun Life, to look at their books on a property. And when I opened the book, it said this property was purchased in 1666. Okay? I would take that as a long-term investment. So things hang around for a long time. Transparency and reporting. This is going to be the big thing in financial markets. Why? Because everyone's demanding to know what's happening to their money. And in real estate, that's a big problem because we're having to deal with everything from a person walking through a shop door to the cost of financing at the very top end. All of everything in between there has to become known to us, and we have to be able to quantify it, how it's going to impact the investments. And obviously on top of all of that, we've got operational risks. People love to tax property because we can't run away with it. And governments, etc. Already I'm hearing talks about limits on investments coming into Europe now on ownership. Couldn't go into a technology chat without a dull flow chart. The point isn't the dull flow chart. The key thing to remember when we're looking at systems, data, investment decisions is that all information about property and investment markets revolves around two very simple factors, two unique identifiers that string all of your information assets together. And they are the tenant, or the person in the building paying the rent, because we all love them. Without them, none of it works. And the location, because real estate is all about people doing stuff in places. If they're not paying the rent, the whole thing falls over, okay? So all of these very dull systems I've put up in here as an example are all linked together, thousands and thousands of different bits of information by those two unique identifiers. So what do we actually do? Well, around each year we get about 20 billion just on the funds I cover come over the desk saying, hey, buy this. Nah. Might go and look at one or two of them. Most of the time we're not really, but the key thing we need to understand very quickly is where is something, does it look attractive for what we're trying to achieve? And if it does, we take it on to the next stage. So we're trying to create a unique identifier for it, understand some of the basic information about a piece of real estate that we're going to invest in. But more importantly, we have to manage that process very carefully. Why? Because if you get two introductions from two brokers, have a guess who wants fees? Both of them. All right? So we have to electronically tag who got there first and say, you ain't getting any money because she gave it to me first over there. We then have to market research. Just in my department alone, we spend $500,000 buying data feeds, just in Europe. Our budget for global research on the equity side last year was $38 million on data feeds. This is big business, okay? We have to normalize systems, collate all sorts of information, whether it's coming in. You know, one of the things on all of our retail units, we have a scanner. As people walk by, it picks up the ping off their phone. That's one level of big data, all the way through to what's happening in the financial markets, because our investors come in yen, what's happened to the currency markets. All of these things have to be linked together on the market, okay? We have to understand them. And we're looking at all sorts of things, so we need to be able to drop a thing on that geocode on this building and say, what's the rent, what's the price, what's the yield? What's happening to the local economy? What's the demographics? Do we want to get involved in that kind of market? What can I read about that market? What are the forecasts? What are all the experts saying? And I need to pull all that together in a matter of seconds so we can begin to analyze investments. We have to understand tenants. Tenant underwriting, huge part of our business. I often get sent, this is the tenant. When I look up who the tenant is, it's not the tenant at all. It's somebody else within a corporate group. They all have different risk ratings. So we're constantly monitoring 6.5 million European businesses. We keep the credit ratings on to understand what they're doing. That's a lot of data management, okay? I'd rather not do it. We reviewed the credit ratings quarterly of 4.5 million UK businesses just on our UK fund to understand the structure. How are our tenants doing? Are they in sectors that are growing? Are their credit ratings falling? Are these growth sectors of the economy? Do I want to have a 10-year lease to this if this whole industry is going down the toilet? I just want to get out and find somewhere else to go. And we're having to calculate probability, so you can see the amount of data and information that's flying around in here. And we put all that sort of thing together without blowing your mind too much. We have to look at things like, how good is the asset? What's the tenant doing? Are they any good? Can they pay for 10 years? How long is the lease for? What's it structured? Is it linked to inflation? Is it not? When does the lease break? When can the person operate a break on me? What's happening in the market? So when we're modeling this type of stuff, we're looking at one asset. Get your maths heads on here. 120 variables go into a model. We look at 4,000 iterations of what could happen for the one building, and we have to turn it into a cash flow, a risk cash flow, and we have to figure out how much risk we're taking and is it something we want to buy. So you do the maths across a $2 billion portfolio, and every single time you run everything, you have to do 120 times 4,000 times 2 billion times the tenants. You need a lot of computing power. And you need some very, very good technology support in terms of data. Then we've got to manage this stuff. We need to have complete 360. I've got clients in Japan, they're not even on the same time zone. They need to come in the same day and see exactly what I'm seeing. And they need to know that that's exactly what the regulator and the compliance officer are seeing. So the Bank of England could call me up at any minute and say, what's your position? And we have to be able to tell them where we are. Okay? I might have leases out against Deutsche Post. Our equity team may own stocks in Deutsche Post, and our bond team may have bonds with them as well. I need to understand how all those things interact. What's our exposure? How do we exit a position? Okay, and in the middle of all this, I've got to monitor all my tenants. So every tenant in every building we have is monitored for its credit rating 24/7. If its credit rating moves by more than 5 points, my team get an email saying, your guy's on the move. You've got to call them up and find out what's going on. Usually it's nothing. They just go late filing or something. But sometimes it does go wrong. Now, I can't rush out and sell the building, but I can phone the CFO and say, guys, I know you're in trouble. Let's do a deal. It will help you. So we've got to give this holistic view of investment on real estate. We have to put it all on a system so that everyone can look at it and everyone around the world is seeing the same thing in the same place. And this is tremendously important because we are being swamped with legislation because of what happened in the great financial crisis. We have to be able to show regulators in Europe, in North America, in Japan, in Korea, that we're the good guys, we're keeping it clean, and you, the investors, can look in and you can get your money back when you need it. And you can see exactly what you're buying. And that really comes down to this transparency in reporting. This is the biggest single growth area in financial markets. And it's the biggest pain in the butt for us from a technology point of view, because, of course, the legislation means, and rightly so, it protects the retail investor, that's you in the street. You have to be able to look in, and I have to be able to tell you exactly where your money is and what it's doing. Okay? It's good stuff, but it creates a heck of a lot of technological change for us, and it also begins to change how you could look at us, because you now have the information increasingly to make your own investment decisions. You don't need somebody driving a Porsche in the City of London to tell you how to do it. So what's actually driving and what other changes that are happening? Hopefully that gives you a few big facts and figures about the sorts of things that are going on in our space. But there are some really big drivers, and these are things that you really need to think about, opportunities for your sector. One, somebody needs to get hold of market, quality of data is an absolute killer. I can get 5 things sent to me and they will all spell Paris in different ways, and that is true, all right? I managed to have one vendor who managed to spell Paris 7 different ways. And this is, because what language are you dealing in? How many spaces? Computers don't like spaces, etc. So we need to understand standardized addressing IDs, and we come back to this geocodes thing. We need to understand that data and information is coming off multiple platforms. It needs to be normalized, or increasingly now with big data, of course, we're able to begin to mix and match things in a far more flexible way. We need to categorize information. We have a sector at the moment called industrial. It's not industrial. It's people selling stuff on the internet. It's a shop with a big box, okay? And that's the window. That's not industrial. So it's all these sorts of information that we need to think about. And what we're also talking about is, this limited information begins to impact our ability to act and pushes up the cost to you, the consumer of the product at the end. And obviously, we want to eliminate where possible. If any of you are in the data collection business, working out, office space, etc., we try wherever possible to eliminate human error by using systems rather than, it's amazing how many big funds are still run on spreadsheets. There's also a major, major change going on in the world. How many people here have got their own private investments, equity investments? Anyone? You're going to look at me and go, no. Come on, this is Sweden. You're all entrepreneurs. No? All right. Give me a call. I can sell you some. The equity funds, if you own equity funds, 99% of what you own today will be traded by a computer. There's no human intervention on equity markets, pretty much. And that's called passive investment, and it's ripping the guts out of the financial markets. Why? Because from my point of view, I can't charge someone for a computer algorithm to trade a market, okay? What does it mean to the property industry? It means that property is one of the few industries we cannot trade with a computer. We need people, and we need a lot more information. And this is changing the nature of the market. As what we're seeing on what's showing on the right there is that in the US equity markets, allocations into these computer-generated funds, the blue line is just going through the roof, everything else is falling away. It's changing the way the markets work, financial markets work. Okay, and this is driven by technology. And algorithm trading is the way the markets are going to go. But weirdly for property, it means we're getting more money. Why? Let's have a guess. Because if the computer can't trade it, we can charge higher fees. Okay, so everyone suddenly in the global investment industry is heading towards real estate because they can make more money in real estate. Why? Because it's an inefficient market. And that's the challenge to you guys. The more efficient you make it, the more costs you can cut out of it. We've also seen financialization. 20 years ago, how many Chinese companies were investing in Stockholm, London, or Munich? Probably a guess. I was outbid 3 weeks ago in Germany on a property by a Taiwanese insurance company in Stuttgart. I mean, how does that work? That's all happened in no time at all. Okay? So in the research industry, we need to understand things like weight of money. This takes us into areas of behavioral economics, another big area in technology, understanding the fact that people don't invest rationally. They behave. Computers can understand how people behave. It was touched on this morning, and begin to think about what are they likely to do if these sets of scenarios happen in financial markets. Will they buy or sell? These are very, very important things. But the biggest thing is we're seeing this global wash of capital. And what the chart on the right there shows is if you look at the turnover in just the UK alone, the orange bar is the amount of money turning over. So in the City of London, the financial district of London, 80% of the value of turnover of investments was by foreign investors. Domestic investors are bit player. And that's happening in cities all over the world. So it's about global capital, understanding what's happening. We can't just look in our home markets anymore. We have to be global. So we need lots and lots of data. It's a lot more complex, in how we deal with it. We've also got increased regulation and greater transparency. We have information coming to us saying we have to restructure, we have to be transparent, the things I talked about just now. And we also just have to do it because it's the right thing to do for investors. Okay, it's not our money, it's the investors' money. But regulation is going to be a really, really big change, and you're going to have to be able to report. We'll be there in just 2 minutes. Technology we can talk about, but the two biggest ones really driving out of here are the big data and big data science, because that links the investment markets to what's happening in the street and the sorts of things that we've been talking about this morning. The ability to process pings of people walking past shops tells us an awful lot about whether our shop's in the right place or not, etc. And some of the things that will come out of there, disruptive technologies. So we need an awful lot of, data deployment, and we need a lot of help from people like you coming up with solutions where we can outsource some of this work which we've traditionally carried ourselves. So what we see is a completely new investment process growing. Instead of having an investment team and research, now we have a three-pronged approach. And this really is a convergence of investment research and technology, because without technology, we can't do the data science bit, we can't do the quants, etc. So really, the conclusions are from our point of view, technology is going to be, if not the largest, certainly a key driver in reshaping how financial markets work over the next 2 decades, okay? Globalization of financial markets means we've got huge amounts of capital flowing around the world, and property is going to capture a large part of that. The demand for technical analysis and transparency is huge, and the point that we now have to be able to present real estate in a way as an investment that people understand it in the context of share markets and bond markets and currency markets. So that information has to be shaped correctly. So there's a huge amount of opportunity out there. If you go knocking on the big financial houses' doors, they are willing to look because they have a whole ton of problems coming at them that need to be solved very quickly. So hopefully that got through in 20 minutes.
Thank you so much, Patrick. And you will be here during the breaks and during the day for somebody that wants to engage.